Ajay, hi, afternoon. Welcome to the show. What hint should we actually gather from the Prime Minister when he says that he was praying to Goddess Lakshmi to shower the poor and middle class with blessings, hinting at what perhaps may be in the budget?
It's good. We can only applaud that. I hope they follow it through with some action. That will be the uh, reaction. For the last 10 years, we have seen that everybody has to bear you know, uh, bear the load of all these schemes. But clearly, there is a difference between the economic poor and the electoral poor. The electoral poor are 80 crores who are getting free food grains every month. And then the huge distribution of about 2 lakh crores across states under various dole-outs, be it to farmers, be it to women, be it to other challenge segments. So the electoral poor are taking a bigger segment of the pie. That is the crowding out of the fiscal space. Again, I don't grudge them that, seeing we wrote off 16 lakh crores on corporate loans and MSME loans and farmer loans over the last 10 years. Giving out 2 lakh crores a year is par for the course, but there's no fiscal space left there. You have a low tax to GDP ratio. You have indirect taxes which are very high. Household incomes in real terms are not growing. Household leverage has grown very high. It's reached 52% of household income. Government debt to household income has gone again to a record breaking level. So we are reaching unsustainable levels on the fiscal front. And if on that you want to then become more conservative and bring down the fiscal deficit from 4.8 to 4.5, then the economy is bearing a big, a constriction. And what is then needed is the monetary policy to do some heavy lifting. That, as we know, takes 9 to 12 months. So even if RBI cuts on February 7th, that will flow through in the economy over the next 9 to 12 months. The markets will move on sentiment earlier than that. But we have missed at least 3 to 6 months on the monetary side and fiscal side. We have not too much space. So I am a little bit concerned at the market sentiment being positive towards the budget because, quite frankly, the space for the FM is very limited.
Bit more realistic with the expectations that we have. That's something that I've heard multiple times today, but just wanted to highlight UPL because the numbers came in. The company has reported a profit of 828 crores versus a loss last year. Even sequentially, there has been quite a bit of improvement. Looking at the performance, the management is saying that with this strong performance, we are confident of delivering our EBITDA and free cash flow guidance for the full year. So they're maintaining their guidance for the entire year. Net debt is lower by $740 million versus last year. But if you compare with March of 24, it is actually an increase to the tune of $363 million. But overall, things look like they're on a bit of a mend, and that's the reason UPL stock is holding in the green right now. Come tomorrow, of course, it'll be all about union budget for what it's worth. You also will get the auto sales data for the month of January. And just ahead of that, so far the earnings season has been decent for the auto pack and the stocks too have managed to recover quite a bit. Kunal, from the auto pack, is there a trade that you would recommend?
Yeah, I think quite a few now because earlier we were looking at M&M and Eicher Motors as the two top names in terms of price performance. But now I think you've seen a wave of short covering coming back into the underperformers. I think the best trade right now when we look at the risk reward is to go for a contra buy on Tata Motors, just about close to that 700 mark. It seems that the stock has come back into a bit of an exaggerated selling and the indicators deeply oversold, so that could probably be a good risk reward trade. Bajaj Auto is something also, even after the last 2-3 days of a mild recovery from 8500 to now 8800, 8900 mark. I think that's also looking fairly attractive. The stock seems to have come back into a recovery mode, and looking at the way the stock had been sold off in the last, I think 14-15 weeks broadly, this could probably be a multi-week rally for Bajaj Auto. So multiple opportunities could probably open up into the auto pack.
Okay, and we've got the auto sales numbers as well come out tomorrow. But we're going to take a very quick break. Come right back. We'll continue tracking markets and the last half an hour of trade ahead of the budget session. Of course, there's Kalyan Jewelers, one of the most beaten down names. That has reacted very positively to its numbers, holding up 11% right now. Cyient is holding up 7% as we speak. There's Naveen Fluorine reacting to its numbers. Tata Consumers, which has gained up about almost 6%. And then, of course, there are names like BEL, also an earnings reaction there, 4.5% of a move. Nestle, which is looking very smart in trade. L&T higher by about 4% after its numbers. And Trent has made it back to those 57, 70 odd thereabout levels. But let's tell you about Tamil Nadu Mercantile Bank and how their Q3 numbers have been. The fine print entails the operating profit has witnessed a growth of about 10% on an annualized basis. Meanwhile, the net profit grew about 6%. Let's also take a look at the asset quality, which has also seen a significant improvement. The gross NPA has improved by 37 basis points, while the net NPAs have seen an improvement by about 57 basis points. Well, that's not all. The deposit growth for the quarter also stood at about 7%, while the advances growth was the highlight, seeing a resilient growth of nearly 14% there. Okay, let's move on and let's take a look at some of the other movers in trade. ICICI Bank, Axis Bank, Bajaj Finance, Kotak, these are your laggards in today's trading session, at least so far indeed. But Ajay, what's been the call so far that you've seen in the market after the earnings, run up to the budget? Have the valuations eased off, and are you getting comfort buying anything, or a sectoral call perhaps?
Sectoral, Aisha, it's IT and public sector banks. I think those two should be the outperformers this year. The big risk is not the budget. I think there is a lot of disappointment already factored in on the budget, though the markets have moved up over the last 3 to 4 days. But the market is going with a lot of healthy skepticism. So that's good. When your expectations are that low, the room for disappointment-based cuts in the market reduce. But I think the bigger risk is Trump tomorrow. So on 1st February, if tariffs come in on Canada and Mexico, that's a huge disruption of supply chains. It's about 25% on $900 billion is what we are talking. So is it only a negotiation tactic by Trump, or will there be some follow through and some economic consequences? Markets are on edge based on that. US exceptionalism is continuing, even though the last quarter GDP came lower, but the strong dollar, the long dollar and short everything else is the favored trade on Wall Street right now. And globally, traders are long the dollar. Third, I would say China's stimulus expectations are high. At least they will manage their market. They have been very clear in asking their big fund managers to buy more of Chinese stocks. So expect good returns from the Chinese market this year. Whether their economy does as well or not, that remains a question. So that's the big global situation for us. Within this, you need a fiscal and a monetary stimulus. Both have been lacking right now. So there the budget becomes important tomorrow. Hopefully, we'll get some answers on the fiscal. And then on 7th February, I'm quite positive that there will be a rate cut of 25 basis points and more liquidity enhancement measures as and when they can do it. The 54-day VRR and all has happened already, but we need another 2 lakh crores to come in to the market.
Yeah, and I guess that's something we'll perhaps hear more on in the next week when the RBI MPC meeting really happens. So that's another factor to watch out for. In the meantime, I wanted to just put the focus on UPL once again, because it's a profit versus loss that the company reported. They're talking about they're in line to meet their annual guidance with respect to cash flow as well as the EBITDA margins. Even if you look at it on the balance sheet basis, the improvement, there is a bit of an improvement because net debt is lower by $264 million versus the level that we had seen in September. And that's the reason the stock has shot up. In fact, the volume growth has been strong at around 9%. The price growth has been strong at around 5%. Overall, the revenue growth is 10%, and that's because there's a negative FX impact to the tune of 4%. Overall, the margin is quite steady, in fact, quite good actually at 41%. It's up almost 1380 basis points on a year-on-year basis. So, stellar show coming in from UPL, and that's the reason that stock has managed to recover a solid 8% as we speak. Naresh, a quick word on UPL and just ahead of the budget, is there a trade that you would want to carry from today to tomorrow?
So UPL looks an interesting case at current levels, starting off with a smaller position and add on the way down 590 odd levels. The stock on the long run is setting up for an eventual breakout above that 620 mark, which was the high for the last 12 to 18 months. So looks promising, good volumes right now, post numbers. So that would be a stock to take a watch on, and L&T could be a trade for the budget as such.
That's a take coming in as far as a couple of these stocks are concerned. But Ajay, on that note, we'll let you go. Thanks so much for making time and speaking with us today. In the meantime, I think Sun Pharma's numbers will be flashing for you on the screen. It looks like it's a decent set coming in. That's the first number that we have for you on the screen. So let's wait by to get more reaction. But 2,900 crore thereabouts is what the profit figure is suggesting versus the expectation of 2,850 crore. And that's why a bit of a perk up on that stock at this point of time. Separately, Kalyan Jewellers is doing very well for itself, 15% higher. A lot of these railway counters are excited. Maybe they are expecting some big bang announcement come tomorrow. So Ircon, BEML, RVNL, these are some of the names which are holding in the green. And overall, there has been a bit of a comeback of the public sector entities. So whether it's an NBCZ or a Garden Reach or even other names like NHPC, Mazgaon Dock, they're all holding up very comfortably between 6 to 10%. More numbers will trickle in for the pharma pack, but before that, let me take it across to Kunal to ask him. Kunal, do you think public sector entity trade is coming back this week? If you look at the PSE index, that's managed to recover quite meaningfully.
Yeah, definitely. I think many of the sectors within the PSUs, they are making a strong comeback. PSU banking stocks, for example, they are looking quite strong. Some of them are looking quite strong. Some of them are getting back into a recovery phase. For example, Bank of India, I think, is one of the stronger name. From the PSU banking lot, then you've seen recovery for the likes of SBI, then recovery coming back for Bank of PNB, as well as the the smaller banks, the Bank of Maharashtra, etc. So that's one space where we are expecting that the markets could probably get back into a slow, steady, gradual recovery. The other space, the defense stocks, I think that's another pocket which is looking extremely attractive. We were discussing a few days back that Mazgaon Dock is the stock which has been one of the outperformers. But the likes of HAL, BEL, these stocks have made a very strong comeback. It's almost like a 3-day, 4-day short covering move where these stocks have moved up 10% plus from their recent swing lows. That's a very strong kind of a short covering move, almost like a V-shaped recovery for these names. And then compare this with the likes of BHL, etc. Even these stocks have been looking quite charged up. So I strongly believe that the PSU sector, the PSU move is likely to come back. But then I think picking the stocks and trying to time it could probably be a better strategy rather than just buying this on the highest degree of momentum.
Okay. Don't be in a rush to buy these stocks. The uptick has been very, very steep indeed. We'll take a very quick break. When we come back, we'll chat with Gurmeet Chadha.